Hello everyone, this is Modified Darvas Box here, coming at you with a quick video here on March 8th, after about 7 o'clock after the market closed. I just wanted to do a quick video. I meant to do one over the weekend, but just never got around to it. And wow, today was something else. So thought I'd do a quick one, so let's get into it. So about me, I've lived all over the United States. I got 26 years of trading experience in total, although the first several years were kind of worthless. First trade in 1995. I traded during the internet bubble, 98 to 2000, which was amazing, but yeah, I didn't know what I was doing. I adopted the canceling method 2003, and yeah, you start getting into strategies. Had my first giant winner in Hanson Natural in 2004. And then the global financial crisis in 2008. Boy, both those periods showed me you can make big money doing this, and you can lose a ton of money also. So nothing's easy in this game. But I transitioned to the Darvas method in 2013. What is the Darvas Box method? Well, only 3 states of trend exist, in my opinion: up, down, and sideways. I am looking to transact when the trend changes, as you can see by these 2 Darvas Box patterns here, bullish and bearish. I primarily focus on the bullish ones simply because I'm kind of bad at the bearish ones. But right now we have a ton of bearish ones. Darvas himself used daily charts. I use weekly charts. And just a reminder that the Darvas Box isn't magic. It's just a framing tool, in my opinion. Framing tool to help you make better decisions. My method is I use weekly charts, big volume, and then fundamentals as well, but the primary is the charts. And lately I've made several adaptations where now I add some moving averages, volume scanners, things like that. But, for anybody struggling out there, the principles are the same. There's nothing new in the market. It's just how we adapt to it. So let's get into some charts and we can see what the heck is going on. So as you guys have seen, it's been basically a wipeout for the last few weeks. Let's take a look here at indexes first. The Nasdaq. Okay, Nasdaq on the weekly chart has formed a new Darvas box. But the way it's doing it, wow, it's getting crushed. Let's look at this. Basically, since here mid-February, it's been all complete downtrend. And we've seen the Nasdaq, seen it here in the S&P 500, but the S&P is kind of interesting because look at it hang in there. And it's really got to be because the S&P has a lot of different components, whereas the Nasdaq is mostly technology. The other one, the Russell 2000. The Russell's interesting as well because, yes, that's also in a new Darvas box. Big volume here selling, but they haven't really been able to knock this one down. Reason? It's because it's got a lot of energy and financial stuff, etc. Totally different animal from the Nasdaq. A few other ones. Let's see the other important chart here, the TLT. This is the big kahuna in my opinion, and I think this is what's driving all the selling. The world got long bonds back in COVID. You don't blame them because it's a very uncertain time. Well, went sideways, and I think nobody figured that any inflation or anything could come around. They saw rates at 0% for decades. Well, guess what? Some inflation came up, or other fears, or whatever you want to call it, and it's been selling off since October. What's new is that it formed a Darvas box here in January, and now it came out of that one, and now the downtrend's accelerating. So basically, bonds are getting wiped out. Now, if the world was long bonds, huge, and remember, they do this with derivatives, and it's not just straight bonds, but all kinds of crazy stuff, they are losing their asses and losing just tons of money. And I think this is what's spilling over into the stock market. Granted, the stock market was ripe to fall, too much margin buying, too much excitement, etc., etc. A lot of stocks had long runs, so it was ripe to fall. But I think what's contributing it and giving it a shove is the bond market. If we look at gold, gold is following bonds. So don't ask me, I don't like gold, but it is what it is. Gold is dropping and also accelerating. Its downturn. High yield credit, yeah, okay, junk bonds, it's formed a box, but yeah, getting pulled down as well. Here's an example of some carnage, software, IGV, just awful. Look at this, the big selling, etc. Let's look at one more. Oh, semiconductors. Semiconductors getting smacked as well. It's just most areas. One of the worst ones is biotech. Look at this, just slaughterhouse. One of the sectors which are holding up, XLE, energy. Look at that. Formed a couple boxes, and now it's in a nice uptrend. And in fact, this is what's really interesting. Energy started moving up in November. Well, guess what was going on in the bond market? It started selling off then. XLF, this year is probably the current leader of financials. Yeah, back in November, they noticed what was going on with bonds, and financials make money when bond yields rise. Well, look at this nice uptrend. So the XLF is a leader, one of the few out there. But beyond that, it's mostly looking pretty bad. So how bad is it? Well, you may recall in mid-February, we had those gap downs when we woke up and everything was down multiple points and nobody seemed to know why. Well, I was a seller there because I saw stuff breaking down, and ever since then, it's just been a downtrend. Yeah, this week right here. So Apple. This you can see here is a Darvas Box breakdown, and it happened on big red volume. So this is a classic sell signal. If you're an aggressive person, you go short. But look at this. It all started giving way right here in mid-February, and it's not stopping at this point. I have a pet theory that all the selling is because the bond market needs money. But I really don't know. They've been screaming to the Federal Reserve for help. We'll see if the Federal Reserve does anything for them. But what's happening is I see tons of these Darvas Box breakdown patterns left and right, everywhere in technology, everywhere you look. This watch list I've got is showing them. And here we go. Here's a whole bunch. We'll just scroll through really fast. Like AI, breakdown, new IPO. AMD, Darvas Box breakdown, big red volume. That's done. AMT, this is cell phone towers. Yeah, breakdown. AVLR, breakdown. This one formed a box, but then the breakout failed. So that's why it's included here. BAN, Darvas Box breakdown, big red volume. Breakdown, CCI, Coupa software. It actually broke down twice. Once at the end of January, and I noted it, but then it rebounded, and now it's broken down again with a vengeance. I don't think it's coming back for a little bit here, but it's just another pattern to take note of and avoid. There's no upside here. There's no trade here. CRWD, ENPH, and actually I called ENPH a volume blowout right here at the beginning of January. Yeah, that call was about 200 to 210. Yeah, now it's $132. This stuff works, but for a few weeks there, I felt kind of stupid. But I should have been short all this stuff, but it is what it is. I don't like to short. ESTC, big red volume. Yeah, that one's done for now. LMND. I never liked LMND, but so people made some big money going up, but now it's giving it all back. LSPD, MDB, can't believe MDB's down, my brand. But I like the stock, but yeah, that's a Darvas Box failure right there. SPAC, Mile, ugh, barf. Net, unfortunately, I like this one, but Darvas Box breakdown on big red volume goes in the avoid list for now. Nvidia, same deal. breakdown. Okta, that earnings is horrible. The reaction it is. Peloton, PTOM, Darvas Box breakdown. Qualcomm, Restoration Hardware, RH. Snow, yeah, Snow, look at this. That one's ready to go down more. Darvas Box breakdown. TDoc, bad earnings, and boy, it sold off from there. Tesla, the big kahuna. Everybody keeps saying Tesla is the stock that represents the market. Well, if that's true, yeah, Tesla had a Darvas Box breakdown on big red volume. That's an avoid. I hope people probably sold up here in the 780, 800 level. I don't think it's going back to 900 for a long time. Maybe never. Who knows? Not really here making predictions. I'm just looking at the snapshot of what's happening. TTD, Darvas Box breakdown on big volume. It showed a little spunk so far today, but who knows? But that's still considered a downtrend. This one was one of the first to go. No reason to own that. And then lastly, ZM. ZM here on its earnings. The green arrow here is earnings. But the market did not like the earnings. It's now at a Darvas Box breakdown. And yeah, it's not a buy. It's an avoid. So as you can see, there's a ton of these. Seeing all these breakdowns and how they set up was why I sold stuff, went to cash, going into turtle mode, and have been that way for the last few weeks. Yeah, I've made some little trades here and there, but nothing big, and it's just sit and ride this out. I do wish I had more of an ability to short, because I saw all these forming, but I'm just not really a person who shorts. So for me, it's just some more sitting and waiting it out. Now, what is interesting is there are a few names here doing okay, and I do not have any energy or financial stocks because those ones are doing well. But a few that are on my list here, like FSR, this had a Darvas Box breakout to the upside, but man, it's had a ton of volatility and just been really hard to hold. So I've been buying and selling this one. I'm hoping the trend reasserts itself and it goes back up, but who knows? Yeah, the cryptos, Mara and Riot, those ones are still above their Darvas Box breakout levels, so they still may have some potential. They're linked with Bitcoin. Oracle, this had, it's funny, last week, all these tech stocks were selling off. Oracle had a Darvas Box breakout to the upside. And it was on big green volume also. That is freaking awesome. The only reason I'm not buying Oracle right now is because it's got earnings in a day or two. But Oracle is one to watch. If you own it, yeah, hold it to earnings. If you don't own it, well, watch and see what happens at earnings. If it gets a good reaction, then yeah, I'll be buying it. You may want to buy it with me. SI here linked to Bitcoin. I like it, but yeah, I was selling it up here in the 150, 160 zone. Now it's at 109. It just has work to do to rebuild its base. Everything else is just giving it up. Snap was a good one. Now it's coming in. Wix was good. Had a big breakout on earnings, but now look, it's broken the box level. This one I don't have anymore. I did, and then had to sell it because, again, this volatility makes it just so hard to own positions. So as you can see, the whole gist of this video is things don't look very good in growth land. So it's time to be careful, to watch out, don't be aggressive, and we just got to wait this out and let charts develop into better bases, better boxes, etc. And then when the new wave comes, we'll buy those breakouts, and hopefully we'll make a ton of money. So anyways, hope you guys have a good week, and I'll talk to you later.